Good morning, ladies and gentlemen. My name is David Breer, and welcome to episode 55 of the 11FS Fintech Insider Breakfast Show. In this show, we bring you the best and the brightest from around the fintech and banking landscape every single weekday, straight into your homes at 8:30 BST, here live on LinkedIn. Today, I am thrilled to be joined by Alison Harwood, who is the head of London branch at Varengold Bank. On this morning's show, what we're going to be doing is talking about the role that fintech lenders can actually have as part of the economic solution around really getting through coronavirus and everything that's happening in this crisis. So, good morning, Alison. How are you doing?
Morning. Good, thank you. Thanks for having me on the show.
Yeah, no problem at all. Where in the world are you today?
I'm in London, Southwest London.
Okay. It's a sunny English day, I have to say. There's a lot of people dialing into this from LinkedIn saying that it's a bit grey and gloomy from where they're at, but definitely not over in Dubai, though. So, Majed, thank you for joining us this morning all the way from Dubai. I imagine it's pretty warm over there, which is good. So, and for everybody else joining us over on LinkedIn, thank you so much for joining us this morning. As always, we love getting your questions. So, as we're going through this, if you've got a question for Alison and everything that they're up to during this period, then leave them in the comments bar. We'll weave it into the conversation as we go. But maybe, Alison, if we start, can you tell us a little bit about the company and what you guys do sort of day to day?
Yeah, absolutely. We are a German bank. We're headquartered in Hamburg, full German banking license. I head up the London branch for the bank, and we've got two core business divisions. One is a commercial banking division, which supports global trade finance, and the other, which is core to the vision of the bank, is our marketplace banking division. And in that division, we provide financing and fronting solutions to fintech lenders across Europe.
Very interesting. I did a panel a couple of weeks ago with London and Partners, actually looking at the ecosystem between London and Germany, Berlin specifically in this instance. But as you say, across Germany, the whole ecosystem for financial services and the role that the regulator plays really has advanced such a significant amount, to the point it's interesting that we often talk about fintechs leaving the UK to go to other places, but you guys are coming from Germany to the UK. So that's a slightly different move than many have taken on that. But what's the vision behind the bank then? Because you guys have set up very differently in terms of how you approach partnerships, and actually the whole ethos, I think, is very refreshing.
Yeah, so the ethos is all driven behind a vision to enable access to financing for the underbanked. And the way that we can best do that and have the greatest reach is through partnering with fintech lenders. So we don't do any direct lending to consumers or to SMEs ourselves. What we prefer to do is partner with innovative financing providers who will be specialist in their product type, their geography, their customer base, and they are much better enabled to provide what their customers are needing in those markets, and we can therefore have a much greater reach than if we were to try and do it ourselves.
That's really interesting. So, a key part of that and a key part of your business is providing those sort of fronting solutions, as it were. Can you just unpack that a little bit more? Because many people might not have heard that term before.
Yeah, absolutely. So we started off in the industry with just providing debt financing, and we were finding more and more, particularly with the relationship between the UK and Germany, where the German market is a lot less developed than the UK market, that we were getting a lot of approaches from customers saying that they would like to launch a new product or launch into a new geography like Germany, but they needed either to get their own license to do so, which would take a lot of time and a lot of investment on their side. So we could help them not only with the financing to grow their portfolios, but also provide them with the ability to operate under our regulatory umbrella and to also pick and choose from our back and middle offices as to what functions they needed to help support their business.
I mean, that's really interesting because, I mean, the whole argument here has always been about sort of manufacturing and distribution. And actually, if you guys can provide the opportunity to do a lot of the, like say, front up and actually be in a situation where you guys can give them the regulatory back end with all of the risks and controls and processes that obviously you'll need them to have in place to feel comfortable to do it in the first place. But they can then really focus, as you say, on what's the USP around the user experience? What's the differentiation on the service? Which very often most organizations don't think about until the end, particularly within these products. So it's a really interesting model to work to.
Thanks. Yeah, we think it's quite powerful, and we can take care of the nitty gritty and the operational stuff, and they can get on with focusing on the product and making sure that it is meeting the need that it's intended to.
Yeah, it's interesting. So, I mean, obviously, during this period, it's pretty tough for people kind of all round with regards to COVID, everything that's happening. I mean, how has that affected you guys? Because obviously you're quite a distributed team anyway with sort of multiple locations, but how has it affected you guys?
Yeah, we are a distributed team, and that's really worked to our advantage. We've always been a big supporter of Agile working, so we've always had the infrastructure in place for working from home. So that was a very smooth transition. And on the whole, it's been very successful, and I think has brought about increased engagement, increased communication between the different locations, and has really been a good outcome.
It is amazing, like I say, the difference that it takes. I know I've talked about it a lot on this show for anybody who's heard me say it a few times before, but I just miss the team. Like I kind of feel like there's a real I think everybody's performing really well, but it just feels like the little bits of connectivity that you'd get in the corridor or in the maybe even in the pub type thing. Those things are just sort of slightly different, aren't they? But virtual bars definitely something we need to get to at some point. But I mean, obviously, during this period as well, your customers' support levels are going to change slightly, aren't they, as well? I mean, particularly where you're talking about, those partnerships where you're essentially providing the back end to other people's kind of front end. How has that dynamic sort of shifted during this period? Because, I mean, face-to-face communications and everything that sort of brings, it's much easier to create a relationship with somebody when you can really see them. But has that changed?
I think we've actually become more connected to our customers. Our customers are spread all over Europe as it is. So where we would have standing catch-up calls that might have still been conference calls, that now feels super old-fashioned to be having a conference call, and everything is now via video. So we feel really well connected to our customers, and have been working really closely with them to make sure that that everything is running smoothly through this time, which it is so far. Obviously, we have our financing product is financing portfolios of loans, which so far are showing good resilience. But we do think we are very cognizant of the fact that there have been a lot of government measures that are supporting economies at the moment. And once those measures start to ease up, remains to be seen what impact that might have on NPLs. But so far, we've had very good transparency with our partners, very good sharing of information. Our partners are watching data points very closely, so very intensive monitoring of portfolios. But so far, so good.
It is difficult times, isn't it? I've said a few times with that. Then I think people like yourselves, and the banks more broadly, I think are in a bit of a rock and a hard place. I think there's been a lot of pressure to lend a lot of money, a lot at the sake of really what normal risk mentality would allow. So there is a real risk, as you say, that coming out of the crisis, unless the government measures change to really give us, and we haven't really heard about what type of stimulus package we're looking at from an economy's perspective to, keep all of these businesses that have been kind of almost on life support for this period of time. How are they going to keep going? How are they going to keep moving? Because to your point, the minute that the sort of default dominoes start toppling, then that could be a real problem, couldn't it? But again, I guess the communication is key there, right?
Yes.
People managing people through these things and actually working with people to make sure that it's not a simple default, or it's not a lack of communication that causes real issues. But I mean, what are your predictions for after the crisis? Because I'd say it's really the pandemic is just the beginning, right?
I think it is just the beginning, but I think to look at the positives that we see from it, that there's going to be such an increased acceleration of acceptance of digitization in financial services, that I think it's a real pivotal moment for the fintech lending industry, and an opportunity for them to really create a stronghold on the market share that they can achieve. It's a big opportunity, and we'd love to see a lot of the fintech lenders able to capitalize on that.
Yeah, I mean, it's interesting, as you say, if the fintechs can help people through these periods of time, and they can obviously create those relationships, then I mean, what will come out of it will be a much stronger relationship with their customers than any big incumbent has ever really.
Absolutely.
So if they can traverse that, then it's super interesting. Some interesting sort of conversation and questions over on LinkedIn for you. One by Zubair Mohammed. So, how are you operating in the UK? Do you have what type of banking license do you have? Is it through an e-money regulations, or is it through a full UK banking license?
We're passported into the UK at the moment. Obviously, that won't be the case in a year or two's time. So we are operating under the passport scheme at the moment, but we do know that we'll need to transition onto a different license. So we've already started the work to transition that over.
And I think the regulators and actually the government are actually doing a lot with organisations who are providing critical services in the UK, aren't they? So it's not like there will be a cut off and you guys will shut up shop and disappear. It's they will manage that as a process, won't they? Which is, I think, if I'm honest with you, almost the Brexit background noise of everything that's been going on is almost, I think, slipped everybody's memory, hasn't it? But
yeah, still there.
I know. Well, it'll start dialing up in the media a little bit more, won't it, as the whole pandemic thing sort of calms down a little bit. But I mean, what other things do you see sort of coming through this? Because obviously, as you say, we've talked a lot on this show before about just working practices. I feel on the other side of this, yes, there's an interesting sort of learning, but I mean, it has the potential to impact, we're both London-based businesses. It has the potential to impact London, I think, really, really significantly, because I mean, I live, for anybody who doesn't know at this stage, you don't know me very well, but I live out in the sticks in Norfolk. So, commuting in and out for 4 hours a day just isn't really a long-term option, given now we've proven that remote working can work so effectively. So, I mean, do you see really in London there being sort of more of a long-term impact either on working practices or even property, I guess, at this stage as well?
Yeah, I think there will definitely be a faster adoption of agile working than we've seen previously. I used to work in a large law firm and at a large investment bank, and yes, that was a number of years ago, but they were still very unsupportive of flexible working practices. And with property prices like they are, more and more people want the extra space of being in that little bit further out. And when commuting is not only less convenient, it's expensive, and it's now questionable how safe that is. I think businesses have no choice but to adopt and move forward. And of course, that's going to have an impact on property prices as well.
Yeah, I mean, it feels all round that might be actually a good thing, mightn't it, in terms of rent from a central location perspective? Just because, I mean, it feels like that market was sort of getting a little bit out of control, doesn't it, in terms of that setup? But some interesting questions again over on LinkedIn. So one from Dan Feeney, who said, "Who owns the legal and risk in the partnership between you guys and the fintech?" So is the risk shared there, or how does that sort of work? Obviously, given it's your licenses that are essentially being used.
Yeah, so when it comes to the portfolios that we're financing through these partnerships, so it will typically be a partnership where we're not only providing the fronting, but we're also financing the portfolios, and we'll be financing on a senior basis. We will have a risk participation through the originator that we're working with, so they will always have skin in the game, and that's really important to us to make sure that interests are aligned not only on the upside but also on the downside as well. I think we've seen a lot of models out there within the fintech lending space where originators are just taking fee revenues from the portfolios that they're generating. And I think environments like the current environment put into quite sharp focus how important it is that everyone has a strong alignment of interests. So it's always been very, very important for us that that both parties are taking on risk and are aligned. Where things are going well, then everyone does well and gets paid. But if things don't go well, then everyone shares in that.
Yeah, no, I agree with that. I think, like you say, it's literally, as you say, aligning those interests mean that actually the longevity of those things that are actually established are really, really important. I think, like you say, it is that distinction then between sort of manufacturing and distribution is always an interesting one, isn't it? Because the manufacturing of it requires to your point, I think when we were offline earlier on, the agility in that system to create what it is that the market requires, and then, as you say, from a distribution perspective, then those players really getting really close to the realities of day-to-day lives for consumers and managing those experiences. I mean, is this how you see the market playing out more broadly? Because that would obviously, the big incumbent organizations have really tried to do all of these things, haven't they? And they've tried to do manufacturing for a long time, and I'd say back-end systems and culture really are the things that sort of inhibit them. And then distribution, well, keeping up with new distribution points. I mean, it was the internet in the mid 2000s, right? But being able to continually create that engagement and relationship with your consumers. I mean, it feels like it's almost too hard to try and be great at both these things. So, you guys are focusing really on one side of that equation and letting other people take on the mantle for the other one, essentially.
Yeah, and I think what the current environment has shown as well is the real strength in the agility of fintechs to respond to changing market conditions. I've been watching very happy to see all of the innovation that is coming out of this environment. And when we look back at the last global crisis, that was really the time when the peer-to-peer lending model was born. And I think we will see a similar level of innovation in this crisis, born out of the agility of these players to adapt and adapt quickly, that the incumbents just don't have the ability to do.
Yeah, it's going to be fascinating. As like you say, there's always opportunity. There's always organisations that spring up to try and maximise that opportunity. So, like you say, 2008 to 2020, the ecosystem is so fundamentally different. 12 years on from 2020, then imagine where we'll be at that stage. But what's next for you guys then? Obviously, during this period, there's some real opportunity, but what really have you guys got on the horizon? Obviously, securing a UK banking license is there over the next 2 years, but what else are you guys looking at achieving?
So at the moment, we're really focused on how we can play our part in the crisis through partnering with government schemes and also some supranational schemes as well. So we are accredited now with the KfW as a house bank, and we're also working with some UK fintech lenders as well to support their liquidity needs under the UK BBLS and CBILS programs. So that's where we feel we can be very quick to either work with existing partners or onboard new partners and support the liquidity need for them to get the money out of the door under those schemes.
That's interesting, because I mean, in the immediate term, as you say, that solves lots of, like, say, immediate problems, doesn't it? But I mean, this model, and I don't want to, I'm sure you guys are kind of thinking about it, but this model is the model that I think more and more geos are looking to move to, in terms of actually de-risking big incumbent organizations. So, I mean, you guys must be thinking about more global expansion, I think, just to capitalize on the wave moving to this type of model.
Well, we could do, but we still see that there is vast amounts of untapped market capacity within Europe. So we're firmly focused on Europe, and we think, rather than setting our sights on expanding globally very quickly, we have a real specialism in the European markets, and they are very nuanced. Yes, we've got the overlay of EU regulation, but each jurisdiction does have its own set of rules and its own regulators, and it's not so straightforward to get on top of all of that.
Sure. Yeah, I mean, Europe's a pretty big place, like you say. It's the difference between the regulators across those things is relatively sort of nuanced as well, isn't it? And actually, even the consumers, the needs in in Portugal to Spain are fundamentally different in terms of how consumers buy products. So it is amazing, like say, how bigger the world is, but how big Europe is as well. So it really is like say, a fascinating model, like say, because you're both the B2C in some instances in terms of doing things direct, but equally you're a B2B player and you're a platform player. So it's interesting. There's a lot there to manage internally and manage externally, and your customers and their customers managing all the way through it's a really interesting way to go. It must be quite complex for you guys to manage, because I guess you've got to have real fleet of footness from a technological perspective in terms of providing that level of service. But equally, as you say, the buck stops with you guys, given you've got the licensing. So it is an interesting one. Day-to-day challenges must be fascinating.
Yeah, they are, but what we really have is a depth of knowledge and expertise on fintech lenders. We're not providing fronting solutions to a wider scope of businesses than that core expertise.
Yeah.
So we know the fintech lending model inside out, and that's really stood us in great stead to service that sector of the industry really effectively.
Sounds good. You just got an offer there from Deval Gore at the London and Partners saying, "Morning, Alison. Would love to get you and your German colleagues involved in our virtual trade mission, taking London fintechs to Germany." So if you're interested in getting involved in that, happy to connect as well. So,
great, thank you.
Awesome. All right. Well, on that note, we better wrap up, because I think everybody's probably got days to go and get on with. So, Alison, thank you so much for joining me. Where can people find out more about you and the company?
Yep. www.varengold.de, and you can find me on LinkedIn.
Fantastic. Thank you so much for making the time this morning. Thank you so much for everybody who's listening. Right, we have a pretty interesting guest for you tomorrow. Tomorrow, we're going to have Nick Cook, who is Director of Innovation Strategy and Competition at the FCA. So with everything that's happening, with all of the changes that are going on, it's going to be really, really interesting to see what Nick has in mind for where we are today and actually where we're going to be going tomorrow. So all we have for you today, I'm afraid, but see you same time, same place. Have a great day, everybody. Stay safe. Goodbye.
Thanks.